Hello and good morning. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Better. So today we'll be talking about the current market events with a key focus on the S&P Global Manufacturing as well as Services PMIs. Then we'll also be looking at a key highlight of what happened last night with FOMC minutes. And later on, we'll cover what's currently happening with the Jackson Hole Economic Symposium that is due to start later today, heading into the weekend. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. Good morning, Thomas. Good morning, Buire, Jesan, Francis, Wangari, and Hilary. Thank you for joining. And let's get things going. So as we all know, this week has been a little bit volatile despite lacking major economic news like the previous 2 weeks. So yesterday we had some major news happening in the afternoon or evening hours. So first, the first data point we saw, which was not on the economic calendar, was basically the US Bureau of Labor Statistics revising the job market reports for the last 1 year, leading through to March, and they showed that the US had overestimated the labor growth by almost 1 million jobs. So over 800,000 jobs that were reported were non-existent, mostly in the private sector, which means that the labor market is much weaker than expected. So later on at 9 p.m., we had the FOMC meeting minutes, and the minutes basically showed that a lot of members in the Fed are very positive about a September rate cut, given the data that we have seen happening from the US economy, from lower inflation, increasing unemployment, as well as a weakening industrial sector. So that caused a massive rally in the US equity indices, whereas we saw the dollar index continue to weaken, and that has been the prevailing theme in the market so far towards this moment. So today we are facing one global S&P global report, which applies to many countries. So since morning, we have seen the flash manufacturing PMI coming in from Japan at higher than expected level of 49. Higher than the previous level of 49.5, up from 49.1, but missed expectations of 49.8. So still below 50, which means that it's still under contraction territory. So in the European PMIs for France, we saw the manufacturing sector weakening to 42.1, down from 44, which was lower than expectations, whereas the services sector was very strong in the expansion sector, meaning that it's above 50.0 at 55.0, which is higher than the expected 50.2 and higher than the previous 50.1. So for Germany, both data points were a miss. Manufacturing was up 42.1, which is lower than the forecast and expectations, whereas services PMI are still in expansionary territory, but missed both the expectation and the previous number. So for the entire Eurozone, we have seen 45.6, which is slightly below expectation and lower than the previous reading, meaning that manufacturing across the Eurozone is weakening. Whereas for services, there has been a big jump, an increase of 53.3, which beat both expectations and the previous number. So we have a mixed data point for the Eurozone. So as we head towards 11:30, now we will be focusing on the UK data. So flash manufacturing PMI as well as services PMI for the UK will be happening in the next 7 minutes. So as we all know, if both manufacturing and services are good, it's good for the currency. If they are bad, then it's bad for the currency. And sometimes you get mixed data, which leads to more of a neutral reaction in the market. So we will be observing that as well as manufacturing PMI and services for the US, which is the most potent data for the day today. So for services, we're expecting a slowdown to 54.0, whereas for manufacturing, we're expecting a slowdown to 49.5, down from 49.6 in the previous month. So clearly, we are seeing the global economy slowing down, and this basically means that we are also seeing demand for oil going down, and this might explain why we are seeing extended drop in oil prices. So later on, we'll be having the Jackson Hole Symposium officially starting today, with the main speech being by Jerome Powell, which will be happening tomorrow at 5 p.m. So the Fed Chair Powell will be speaking at the Jackson Hole Symposium tomorrow at 5 p.m. So that's a key central point given the data we have seen from the US economy. So we expect that Powell might inject some strength in the markets, or inject some weakness in the dollar, especially if he promises to go for a much bigger rate cut. So the question about interest rate cuts for September has now moved from whether it will happen or not. Now investors are weighing in whether it will be a 25 basis points or a 50 basis point cut. So the cut is a given, and that's why we are seeing the market basically reacting the way it is. So among other key highlights in the markets, we are seeing that Bitcoin has now resumed $60,000. So for crypto traders, it's all green in the market. So majority of the currencies are now in the green. Seems like a good day. Then from the FinViz website, here we normally check the performance of the currency in the last 24 hours. So clearly, the Swiss franc seems to be the strongest currency for the day, whereas the yen seems to be the weakest currency for the day. So if you expand this to the entire week, then you'll notice that the US dollar has been the weakest currency, whereas the strongest currency has been the New Zealand dollar, which is up 1.95% against the dollar. The Swiss franc is up 1.88% against the dollar, the yen 1.44%, the pound 1.26, the Australian dollar 1.23, and the euro 1.09, whereas the Canadian dollar is up 0.72% against the US dollar. So in this case, if there's any news affecting the dollar, if the news is strong and strengthening the dollar, then we might want to trade it with a weaker currency, perhaps the Canadian dollar. But then if we see a much weaker dollar, it might be better to trade it against the New Zealand dollar, which is a stronger currency for the week. So on other news, if we check the key highlights, besides the politics that we've been seeing in the markets, for instance, Kamala Harris' policy on banning food price gouging, there are other things that we are seeing. One, US employment falls by 818,000 in new revision. That was the major market mover yesterday. So Zoom hopes after boost to full year revenue outlook. So in this case, Zoom is expecting to make even more sales and more revenue towards the end of the year. So with a better outlook, we saw the stock being up 1.86%. So Snowflake, since after sales outlook falls short on AI, but eventually recovered, ended the day at 2.38%. So then other highlights in the trading side, German economic downturn deepens. So German's private sector economy remained in contraction in August, with the HCOB flash Germany composite PMI output index dropping to 48.5, indicating a slight acceleration in the decline of business activity. Manufacturing production continued to fall sharply, while the growth in the service sector slowed to its weakest pace since March. So France's service sector, as you have seen, has expanded the most in over 2 years. European markets set for muted open. We are not seeing much activity. Fed inches towards a rate cut. That is something we've already discussed. And oil nears the price at the end of the year and the lowest of the year, trading at $72 per barrel for Brent oil. South Korea holds rates, cuts slightly outlooks for inflation. And lastly, Japan services growth at 4-month high. So that being the highlight of the day, now I believe it's time we jump into our favorite part of the presentation, where we basically cover what's currently happening on the charts. So we'll be looking at the major currencies, try to understand what's happening. And once we cover that, then we'll be looking at some more stuff. So let's begin with the UK 100, which is making an impressive recovery. So we had projected double top formation with a break here. Somehow it didn't play out for long. So we are seeing more of a market that attempted to go downwards and failed. So now we are seeing a resumption of the bullish momentum, perhaps to retest the upper trend line, which started being formed at the all-time high, which was there on the, I believe this was the 15th of May. So since we have seen all this drop from the all-time high price here, so the market corrected by 6.66%, and now it's moving back upwards, and now the upper trend line remains a key theme. So after the recent pullback, we are seeing the market resuming bullish momentum. So from the 1 hour chart, this is how it looks like. 15 minutes chart, this is how it looks like. So if there were levels to work with, especially yesterday's high and low, then you can see that the market has not even attempted to retest yesterday's low. We are seeing just a cruise above yesterday's high, which means that there's room for more upside momentum for the UK 100 index. So for the dollar index, this is what we have been experiencing. So a total strong bearish momentum. So yesterday there was an attempt to move higher, but eventually the market dropped even further downwards. So today the price action we are seeing was that the market opened with a slight gap downwards, closed the gap, traded up for a while before dropping and then jumping higher. But overall, it seems that the market is still likely quite bearish, given the overall trend we have been seeing. And now we have seen a new low in the dollar index, a low that we haven't seen for a while, and this is 100.739. So we could be seeing some further downside momentum in the dollar index, but as I always say, even if the dollar is very weak, it always finds a way to come back. So we could be seeing some form of recovery playing out today, but overall it seems more bearish given the long-term trend being the bearish momentum. So judging this with the major currencies, you can see, for instance, the Euro USD has continued to push higher. So based on the analysis that we did on Tuesday, we would see some higher momentum towards 1.11373. Eventually, the market hit the target yesterday. So further momentum upwards, followed by a retest of the same area, basically implies that we could be seeing some further upside potential. So we have already hit this particular high. This high was broken. So now the next high is all the way up. So if the dollar continues being weak in the market, then the euro could potentially hit 1.125. So this might not be straightforward. We might be seeing a lot of noise in between. But as per today's price action, it seems more likely that we had a rise, a pullback, and now we could be seeing a continuation, forming yet another leg in the bullish trajectory. So on the 15 minutes chart, this is how it looks like. So think about it this way. This was a key level breakout. Market goes back. And now might be headed all the way up. So we could be seeing some further upside potential in Euro USD for the day, especially given that attempts to move backwards have already failed, bouncing off 1.11373. So for Pound USD, as I mentioned, it seems to be one of the strongest currencies in the markets today. So from the daily time frame, this is how it's playing out. So we had an earlier target of 1.30426. Market closed through that yesterday. And now we are headed to the next highest level. So the next highest level is somewhere around here. This is 1.31438. So 1.31438 is not very far off. So even if you go to the 4-hour chart, so it's something that might happen in the next 4 hours. So I expect the market to complete this cycle by eventually getting to 1.31438. So it's a pretty straightforward momentum for the Pound USD currency pair. So even after the early morning pullback, we are seeing the market responding quite positively. So for the pound yen, still some very strong momentum upwards. So this is how it looks like. So a market that entered into a triangle and now is on the verge of breaking the same. So for those who are not familiar with the triangle formation, we basically track the highs and lows in the chart. So this day's high, we can ignore the tail here. We look at this high here. And now when you compare with the lows, from this low to this low to this low, it seems like the overall direction in this chart was this one. So if you are to draw a triangle here, then this is what we are having. And this seems like a clean break in the pound yen pair. So whenever you have such a clean break, you want to ride that momentum. So as usual, we often target the top of the pattern. So 191.262 seems like a likely target for intraday trading the pound yen currency pair. So as for the USD JPY, it continues being weak. That is, the dollar continues losing momentum to the yen. So from the 1 hour chart, you can see the strong bearish momentum that played out yesterday. We did quite get to the predetermined support area. So the market bounced quite strongly. And now what it looks like, it's as if the market is trading in a falling wedge. If you compare this with the kind of lows we are seeing in this market. So it seems like the market is following this path, and that for the last 3 days, the overall price action has been following this path. So if we happen to see a break here, we could be seeing the market earning higher and perhaps heading straight to the resistance that we saw yesterday around this area. So if there's a clean break from this point, we could be seeing a rally towards this point. But then also remember, the market could get right back into the pattern and continue further downwards, heading back down towards the previous low, which was around 144.526. So among other pairs is Bitcoin, which managed to make a clean breakout yesterday in the evening. So notice this, and we had projected that it should drop here towards this area, and this was on Tuesday. So Wednesday it bounced quite strongly, that is yesterday, and almost towards midnight there was a clean break of the upper trend line, which indicated that Bitcoin is now breaking towards the upper side. So after seeing this, you can see that there was a pullback, and today's low is much higher than yesterday and the previous day and the previous day, which indicates some form of bullish strength in this market. So from the 4-hour chart, this is how it looks like. So clearly you can see that the previous candlestick was a rejection of lower prices. So now we might expect to see some further upside momentum. May not be as strong, but going by the rules that we have just identified, then 62,764 seems like a nice target for the bullish momentum here. So for the dollar trading against the Swiss franc, the bearish momentum continues. So we had identified several levels. So the one that we saw on Tuesday was that if there's a clean break here, then there would be a drop towards this area here. And if the market breaks that, then we saw a potential extension of the rally all the way down. So notice how it played out. It was not straightforward. So it's more or less like the market breaks a certain support level. So if we use this as the price point right here, so market breaks out, retests, and then continues, then pulls back and then continues. And now we are on the verge of another break of momentum for the downwards, which means that if we break yesterday's low, then the potential is that the market drops all the way down to 0.84455. So New Zealand USD continues to be the strongest currency in the market right now. So, sorry, the New Zealand dollar is the one that is strongest in the market right now. So it continues enjoying some good momentum, and now it seems like our trend line almost doesn't apply. So from the daily time frame, this is what we are looking at. So the market gunning for a new high, and the last time we saw the market trading at those levels, it was trading at this area here. So notice the coincidence of times that the market had found resistance there. So there's still more room for upside potential. If you look at the 4-hour chart, then this market has the potential to extend the rally to 0.62153. So I'll be talking on the some of the questions that you guys have, and once we check the questions, then we continue with the analysis as we approach the end of the presentation. So just a second. All right. So, first question is from J Squad. Why is it difficult to make something with an account of below $100? So most traders who trade a very small account, especially if you're trading $100, they don't appreciate the small percentages they make. So if you have an $100 account and you're making 2% a day, then you're literally making $2, and they will tend to view that as a much smaller amount compared to someone who is trading $1,000 and their 2% is $20. And let's say a $10,000 account, their 2% would be $200. So in that case, what they end up doing is trading with a much bigger risk, maybe a bigger lot size. And by taking much risk, then if they are wrong on the market, they end up getting punished badly. So if I had a let's say $100 account, I would be focused on the percentages I'm making. So if I can make 2% consistently, and I do that for 6 months, 8 months down the line, then I'm able to showcase my skill and now work out the other angle of finding enough money to fund my account, which would be accompanied by my skill to yield me some much better results. So from Wangari Patrick, in tomorrow's speech by Jerome at Jackson Hole, can we expect anything different from what was really communicated yesterday in the minutes? Can we expect the weakness of the dollar to continue? So yes, I expect the weakness of the dollar to continue, but then these times are quite trying, so we don't know exactly what Jerome Powell is going to say. But judging from the previous Jackson Hole symposium events, we tend to see an increased volatility in the market, and as we all know, without volatility, there is no profit for a trader. So for me, I would be very patient on that one. I expect Jerome Powell to reassure the market that they are considering the new data and they are probably going for a rate cut as a confirmation. So whether or not they go for 25 basis points or 50 basis points is the big question in the House, and I don't expect Jerome Powell to rake that. But if in case he does, then we could be seeing a market reaction. So it's one of those events where you don't expect anything to happen, but you follow it up anyway, just in case something happens, so that you are there in time to react to it. So a good question, when you're starting from a small account, after blowing a big account, reasonable range capital amount that you inject in your account, kindly take that too. Maybe you can start with anywhere above $500 would make sense. And then you create a plan to top up until you get comfortable with your initial balance. So anything below that tends to be working against you, especially if you have a bad run. So the next question is from Apollo, and thanks for asking. Hello, Rufus. I've been following Euro USD and Pound USD on higher time frame, monthly and weekly. The pairs have been in a downward trend channel, and now nearing the upper line with weakening DXY. What's your take? So yes, I expect that with the DXY weakening, investors are already pricing in the potential that the Fed will go for a rate cut. So they're not waiting until the Fed announces they have cut interest rates in order to sell the dollar. They have already been selling. So as a result of that, we have seen a much weaker DXY, and it has been weakening week over week. So the news will be a confirmation in which we expect to see the opposite in the market. So once the Fed actually confirms that they have cut interest rates, instead of the dollar weakening further, I expect to see the dollar bouncing back. So if the dollar is bouncing back, it will be bouncing against the pound, it will be bouncing against the yen, and that might play out according to the trend line you're talking about. So I'm sorry, I've been so busy, I haven't been able to respond to this question. So I'll check out the commitment of traders report later. So there's a question on Audi New Zealand. I'll be checking on that. Audi New Zealand. Some of these charts, especially for crosses, I don't normally have them open. I rarely trade the crosses. So basically trading Audi New Zealand is basically similar to having two positions, one in Audi USD and the other one in New Zealand USD. So Audi New Zealand seems to be dropping, but volatility seems to be weakening over time. So clearly a market that is losing momentum. So of course the overall direction is bearish. So you can all see this has been the prevailing momentum. So New Zealand dollar, as we have already identified, seems to be the strongest currency in the market. So the Australian dollar has been losing to the New Zealand dollar, but as of this morning, we are seeing the market struggling to make new lows. So the low of day yesterday seems to be similar to the low of day today, and the market is failing to break that. So we don't have any serious signs of bouncing. So I would be very, I would say, disinterested in trading such an asset. So it's one of those assets that you know clearly it's just ranging. So we have already seen low of day, high of day, and the market is trading in between. So an overall price action of sideways. So unless something major happens, I'll just stay off it unless there is a clear or clean direction happening in such a market. So market is not headed all the way down. It's finding support here. It's not going all the way up, especially judging by yesterday's high. So it might end up disappointing you, whereas there are other assets that are making major moves. So on the question of NSE derivatives, we don't have them anymore. Haven't seen them on my charts. I will ask my colleague to confirm this for me. For a beginner, what would be a realistic monthly account growth target in percentage? Not all months will be the same. So it's more about being in the process, following your strategy and looking for the best rates in the market. So rather than having a target in terms of percentages, because sometimes you'll get disappointed. I personally also get disappointed too. There are months that will be very good for trading. Other months, the markets will be just moving sideways. So question about how long I've been trading. I keep this personal information private, but it's a long time. So the USD tend to do something on dollar weakening. What can we expect? Because they can't allow it to continue weakening. Oh yes, they can. I have news for you. The Fed and the US Treasury can allow the dollar to weaken, and they can allow the dollar to strengthen. So when it was up, it's them who allowed it to go up. And they actually wanted it to go up. And now that it's going down, there's a reason that they are looking to see that happening. What else do we have? Of course, there's a question on gold. And the Nasdaq. Thanks guys for asking about this. So let's check on gold. So gold clearly, after hitting a new all-time high on Tuesday at 25.32, pulled back, found some support. Yesterday kept going down, found support. Today down and found support, resistance. As we can all see, the volatility in gold is clearly dying out. So I don't think it's the same market that we were enjoying extreme big moves a few days ago. So the volatility seems to be going out. So one way to identify this is by using the daily range. So the daily range is the difference between the high and low of a day. So if, for instance, you're looking at the range for this particular day, the highest price was there, the lowest price was here. So if you compare that with yesterday, the highest price was here and the lowest price was here. So the height of these rectangles is basically showing you the range. Then you compare that with today, then the range is getting even smaller. So clearly, you can see that volatility in gold is dying, which means that a good setup is coming. So I like seeing this kind of activity happening in gold, because when the range keeps on reducing, then it prepares you for another major breakout. So we could be seeing a major breakout happening in gold, but as for now, it seems more likely that the market is weakening, forming lower highs. For the lows, they seem to be relatively the same. I would say this has been the overall support area here. So let's remove the range highlights and observe this area here as a key level support. So 24.99 seems more of a 2500-ish issue. So right now it seems like the market bounced off up higher, didn't reach the high of day. It's now extending further back downwards. So we could be seeing the market going for this area here. So for intraday trading, I believe we should be looking at 24.99. Then we observe that price level to see if there's a bounce and the market continues to remain within pattern. But then the key interesting thing would be if the market actually breaks. If there's an actual break, then that would give us a nice opportunity to go for a very important short selling position. So for US equities, the Nasdaq made a big swing yesterday after the surprise news. Then a big swing downwards up and then all the way down before making a rally and then closing the day on a high. So today, the market opened with a small gap. You can see the small gap here. Rallied for a while, dropped towards the end of the Tokyo session. And then as we enter the London session, all we are seeing is recovery. So it seems like these equity indices are attempting to push even further. So remember, the SP 500 is less than 2% away. Sorry, this is the Nasdaq. So the Nasdaq is about 5% away from its all-time high, which is a very short distance, which it could be covered in 2 to 3 days. So this is 4.42%. So if the Nasdaq rallies 1 to 2% a day, then 4.42% could be covered in 2 to 3 days. So there is a good chance that the market will complete the recovery cycle, where we had this sell-off, market dropping 16.85% and then making a recovery. So having seen the market form 8 consecutive positive closing days, one negative one and then another positive one indicates more of a continuation. So from the day time frame, notice the one day we had a pullback, the green basically outshadows the previous candlestick, which implies that we could be seeing some further extension of the bullish momentum today. So perhaps a 1% rally for the day might play out, especially since the market has just recovered and it's back at yesterday's closing price. So for the Dow, it seems like the market is really struggling to break that resistance. So clearly, the major resistance is around this area here. So I would say that's our resistance, and we have a horizontal support here. So I would say that for the last 2.5 days, this has been the overall price action. So it would make more sense when the market eventually breaks the upper trend line as a form of continuation. So for the SP 500, the market is really attempting to break the resistance. So despite the momentum that we saw yesterday, it seems more likely that the market is finding resistance along this area here. So it's a very short-term pattern considering the last 2 days. So if this is it, then the potential for the market breaking above this area could be the key signal that the market is headed for a higher close. So if we see this playing out, then we should be gunning for a new all-time high. So as I had mentioned, the SP 500 is very close to hitting a new all-time high. So from the current price level, if the SP 500 continues with the bullish momentum, then it's just a 0.79% increase or rally before it hits a new all-time high. So given that the Fed is more likely to cut interest rates in September, then this should be positive news for equities, and we could be seeing the market going for new all-time highs. Silver seems to be struggling with volatility. I think it's similar to gold. We have already seen what's happening with gold. I have explained the day range and how it keeps on reducing. So it seems like the same thing happening over and over. So looking at rate cuts, all central banks are rearing to cut rates, and only the Fed that hasn't. However, US appears to have the most resilient economy. How is that then that DXY appear to weaken? So if the Fed is cutting interest rates, it's a major indication that they held rates far high for too long. So it's basically an indicator of underlying weakness in economic conditions. For instance, we saw a revision of jobs yesterday by over 800K, which basically implies that the reported job numbers are not real. It means that they have been massaged higher, and now the underlying labor market conditions are much weaker, which could be very risky and lead the US economy into a recession. So knowing that that is a very real possibility, the Fed cutting interest rates might be more rapid than we earlier anticipated. So in that case, the US beginning to cut rates means that it might do it quite rapidly in order to save its economy, and that's what a lot of investors are focused on. So also there is the issue of the reverse carry trade. So the reverse carry trade with much lower interest rates in the US, it means much lower bond yields, and as a result, we could be seeing a reversal of the carry trade. So the last part I'll be covering today is a question from Dishon. This is analysis after the news. So let's see what we got here. Pound USD. Refreshing my charts. Clearly, both data points are better than expected, and as I said, manufacturing and services PMI being better than expected is positive for the pound. So let's see what we got on the pound. So the dollar is currently the weakest currency in the last 24 hours. So we should be seeing the pound looking to extend its rally. So pound New Zealand is making a strong rally here. Pound yen extending the rally, almost hitting target. And pound USD just made a big jump and is now retesting the previous high of yesterday, which means that we could be seeing some further upside momentum happening with the pound. And as I mentioned, the target is around 1.31438. So that's it for the day. Thank you very much, guys. Remember, we have a new episode of the Bullish Banter podcast available. So make sure to check it on YouTube. That is FX Pesa YouTube channel. The title for today, The Female Traders Taking the Markets by Storm, featuring Miss Gathoni and Neema. Hopefully you get to enjoy the episode. You can also reach the podcast episode from all other streaming platforms. So that's it. Thank you very much, guys, and I hope to see you on the next session. I know I've already overextended the session for today, so I hope to see you guys on the next one.